markets may be rebounding, but take a look at the 10-year Treasury revisiting all-time lows. That is the annual yield on a 10-year Treasury note, 0.96%. Think of that. Mortgage rates are likely to go lower following all of that. To Loan Depot Chairman and CEO Anthony Hsieh, if this is the boost that housing really needs, doesn't need it as much because some of the housing numbers have looked pretty good of late. But Anthony, what do you think?
Well, housing was already strong, Neil. So this opportunity today allows lots of homeowners to refinance to lower their household debt, and the carry that it has in this market could be the biggest of our history as far as refinancing. So it's an exciting time.
You know, you always look at low rates, I guess, Anthony, and you say, well, that could the ship coming in for a lot of borrowers who can use the boost. But it also is a reflection of a market betting on slower times. And do people get rattled by that and postpone home purchases, maybe not refinancing the home they're already in? What do you think?
Well, there's two sides to look at this, right? And that is, you know, where are interest rates going to go? We have an election year. It's a transitional year. And we're looking at the 10-year yield being at its all-time low. It's, what, 95 basis points this morning.
Right.
So we have $11 trillion of mortgages outstanding. And depending on what reports you read, Neil, 60 to 80% of that $11 trillion is in the money, meaning that 60 to 80% of it, if they refinance, they'll be able to lower their household debt. So
what is the rule of thumb on
avalanche.
that? But I'm sorry, Anthony. What is the rule of thumb on that? People who entertain refinancing, you do so if it's a half a point lower or more. What is there a rule of thumb? I guess whatever is palatable to the borrower.
Yeah, you have to look at the remaining term. So it depends on how deep you are in your remaining term. But it's a quick calculation these days to see if refinancing makes sense. If you're able to lower your payment or shorten your term, it's pretty easy these days. And technology is really advanced. So refinancing is a lot easier today than what folks are accustomed to just 5 years ago. Where
do you see the most aggressive lenders putting rates right now if you're looking at a 0.95% on a 10-year note? Now, I know there are different measures by which you can get mortgages and all, but what are we looking at here?
Well, you got to keep in mind, Neil, this is going to be a supply and demand challenge.
Right.
You know, as customers start to be aware of lower interest rates, the industry does not have the capacity to handle all of the demand that's upcoming. So I think we may be headed towards even a reservation system. The mortgage industry is used to funding $1.5 to $2 trillion a year. We may be headed towards a year, if interest rates stay down, Neil, we may be headed towards a $4 to $5 trillion demand market. And at the end of the day, there's just not enough money or bodies to go around all the applications that are coming in. I think there's something that I think we need to be watching here, because the demand will surpass the supply or the capacity in our industry.
And in that vacuum, people who are trying to pounce on these very, very low rates might miss a window, right? Or at least it's pushed back a little bit.
That's right. That's right. And your typical 30 to 45-day closing cycle could be stretched out to 90 days or more.
Wow.
So, you know, a customer just needs to be well prepared and be patient, because at the end of the day, you know, a refinancing or a mortgage loan is still pretty complex. Although technology has helped it a lot, there's still quite a bit of work to be done. So everyone just needs to remain patient, but at the same time, be prepared to have all of the information and be responsive.
Can mortgage rates stay low through that up to 90 or more day wait?
Yes, I think so.
Okay.
You know, of course, you know, no one can predict interest rates, and certainly how far it's fallen just in the last couple of weeks has surprised a lot of folks. But I think that as it stays down, you're going to have this incredible demand coming from customers that are searching for lower interest rates. So regardless whether you're purchasing a home or refinancing a home loan is the same. And that is, there's got to be fundings, and this additional $1 trillion or $2 trillion of demand, like my parents always told me, money doesn't grow on trees, son. So this funding's got to come from somewhere within the industry.
That's a very good point. I'd never thought of just the basic supply and demand equation here and how that could disrupt this. So
That's
we'll
right.
watch it very closely, Anthony. Thank you very much. I appreciate it.
Good seeing you.